Permanent establishment income is a concept rooted in international taxation, primarily based on treaties between countries to avoid double taxation. Under these treaties, a foreign business must have a permanent establishment, PE, in the other country, in this case the US, for its income to be subject to taxation in that country. A permanent establishment is generally defined as a fixed place of business where the business is carried out. It could include an office, factory, branch, or even a construction site, depending on the specific treaty or local laws. Here's a breakdown of how it works. Permanent establishment and taxation. If a foreign business has a PE in the US, the income that is connected to the PE, e.g., income generated from the activities conducted at that fixed place of business, is generally subject to US tax. The taxation of this income is similar to the concept of effectively connected income because the PE is treated as having a significant enough presence in the US to justify taxation. Types of income. Subject to tax. Income from business activities. Any profits that arise from the activities carried out through the permanent establishment in the US are taxable by the US. Income from the sale of goods or services. If the PE in the US is involved in selling goods or providing services, the profits from these activities would be taxed in the US. Key considerations. The existence of a permanent establishment does not necessarily mean that all income of a foreign business is taxable in the US. Only the income that is effectively connected with the PE or that can be allocated to the PE's activities in the US would be taxed. Additionally, the threshold for what constitutes a PE can vary depending on the specific tax treaty in place between the US and the foreign country. In short, permanent establishment income refers to income that a foreign business earns from its US operations through a permanent establishment, which is a fixed place of business, as outlined in international tax treaties. The US-Canada Tax Treaty is a great read to learn more about how permanent establishment income works.